Hello friends! Today we'll talk about indicators and how to work with them on the Pocket Option platform. I'll also open several trades and show in practice how we analyze the situation when using indicators. Indicators are tools that help you understand the market, where the trend is, where a potential reversal may occur, and where the market is overbought or oversold. But it's important to remember that indicators by themselves don't generate profit. They provide signals that need to be read and combined correctly. In this video, we'll make 3 real trades, each based on combination of 2 indicators, to show how to use them in practice. So let's get started. So, where would I like to begin? We select indicators right here. The first indicator is a moving average. This is a moving average line that shows the average price of the period you choose. Our time frame is 1 minute. We'll also open the order for 1 minute. I'll set the parameters I'm going to use right away. So the simple strategy based on this indicator is to trade in the direction of the trend. When the price is above the moving average line, the trend is upward. I often use these indicators paired with another one called RSI. This is an oscillator that shows whether the market is overbought or oversold. A value below 30 indicates oversold conditions, a signal to buy. A value above 70 indicates overbought conditions, is a signal to sell. As you can see, it's approaching 70, so there's not yet a clear sell signal, but it's getting close. In general, we'll often use these 2 indicators together. One shows the overall trend and the other shows a market condition, overbought or oversold. Based on these readings, we open our orders. And I think we'll try to open our first order now. So what do we do first? The indicators are set. We look at whether the 70 level has been broken. It hasn't. There's a clear upward tendency, right? I think when it pulls back slightly, we'll wait a bit more and then open a buy. For now, I think we can already open buy here, and now we'll draw horizontal lines to understand the previous highs. The upward trend is obvious. The price is above the moving average, and again, it's not breaking the 70 level. Now, by the way, it has approached it, but I think the situation won't change within a minute, especially since half a minute has already passed and the second candle is moving upward. I think we'll close in a very good profit. Once again, we risk 2–3% of the deposit. Don't rush after big money. We'll have time to earn steadily over the long term and build solid capital. So, what did we base this on? I'll repeat, 2 indicators. One shows the overall trend, the other based on the values show whether the market is overbought or oversold. Right now it's approaching the 70 level, so if it breaks it, you could open a sell. But since it hasn't reached it yet, we open a buy based on the overall trend. And as you can see, we closed in profit. That's our first order. The euro and Swiss franc currency pair on the 1 minute time frame. As you can see, it closed in profit. Now let's move on to the second order and 2 other indicators. So we remove these indicators and choose another currency pair, for example euro and dollar. Here it is. We can already see an upward trend on the chart on the 5 minute time frame. Now I'll check the overall trend on the 1 hour time frame. It's generally confirmed. It's fluctuating around the middle here, but you see the spike, right? Okay, now I'm switching back the 1 minute time frame. Next indicator I want to talk about is called Bollinger Bands. We go to the indicators, find it here, open it, and we see these lines appear. These are bands that show volatility, the upper and lower bands around the price. Here you can see the average price as well as the upper and lower bands. The price often bounces off the upper and lower bands. A touch of the lower band is a potential signal for a reversal upward. A touch of the upper band may indicate a reversal downward. In general, I use this indicator less often than the previous two, but when I do use it, I pair it with the stochastic oscillator. Now let's find it. Here it is. This is an oscillator that shows overbought and oversold conditions. Again, the levels below 20 indicates oversold conditions. Above 80 indicates overbought conditions. As you can see, it's approaching 80 and moving above it. This perfectly confirms these signals. Again, looking at the situation now, we see a fairly long period above 80, which indicates that the market is overbought. Yes. Accordingly, we can place a sell trade here. Now we'll try to open a sell order. So we set it up, open it, and wait for the result. Here you can see the price touching the upper band. Again, if it doesn't break higher, that's a good sign. For now, we are waiting. There's still plenty of time. I think the price won't go above this level and will start to fall, judging by the indicators. As you can see, indicators help us assess past market behavior. Here you can see there was a break below 20. Oh, it's starting to move down a bit, just as we said. So everything was confirmed. As you can see, a pair of indicators simply helps us analyze in much more detail what has been happening in the market. It's like a counter. It records market events and shows us, based on the data, where the price may reverse. We saw that it stayed above 80 for quite a long time, which means we could open a sell trade. And as you can see for yourself, there was also a touch of the band. All the signals pointed to a sell, despite the candle staying in profit for a long time. The indicator still showed that opening a sell here was more favorable and had a higher probability of success. And that's exactly what we did. As you can see, the second trade also closed in profit. Now I think we'll move on to the third trade. We close these indicators and choose a new currency pair. This one, for example, I think, by the way, this one will show strong volatility. You see it's quite a lively pair. Big spikes like this. I will draw the levels and take into account that this was our last high. Which indicators will we use here? I think we'll use the MACD indicator. I'll explain what it is. Here it is. It shows the strength and direction of the trend and consists of two lines. the MACD line and the signal line. A crossover of the MACD from above downward is a sell signal, like we had here. A crossover from below upward is a buy signal. There's a clear bearish trend despite these candles. The situation is gradually stabilizing, but there is still a downward tendency. Now I'll also check the overall time frame. This is another important point. You don't just set an indicator and look at it on a signal time frame. You must always analyze multiple time frames. Never forget that. Overall, I think the price will move toward this low, or maybe even lower. But there is a clear sell signal. I want to use this indicator in combination with the first indicator we used, the moving average, which shows the overall trend. As you can see, the price stayed below the line for a long time. There was a small false breakout upward, but overall it remained below the line. I think we can open a sell trade. Now we'll set our parameters. Let it be like this, and we open a sell trade. That's it. We wait and see how the situation develops. Now let's look at the impulse on the 10-second view. There's a downward impulse, as you can see, and it's quite strong. Once again, the indicators showed us that there may be a selling trend, that is, a downward movement. Once again, we switched to a smaller time frame to observe the market impulse and short-term price dynamics. Now I'm switching back to 1 minute time frame. I think the price may move even lower. In other words, besides trading with indicators, we don't forget to actually look at the chart. We reviewed where the lows were and what the overall trend was, looking at both and 1 hour time frame and current one. And here we made a profit. Congratulations! Take a look at these great results. In a very short period of time, in less than 10 minutes, we earned quite decent money. Everything works as a system. You should use no more than 2 indicators, so as not to get confused. If you load 10 indicators onto the chart, that still doesn't guarantee you'll take money, because the picture needs to be clear. An indicator is just a supporting tool. In addition to following what it tells you, you look the overall trend, draw the high levels, identify support and resistance levels, that is, you perform technical analysis. The indicator is simply there to help as an additional function. The main idea is that indicators are best used in pairs and to filter out false signals. This is an important point. On top of that, you work with the chart, analyze it manually, perform technical analysis, and look at different time frames. This is essential. I hope it's clear how to work with indicators, and the next video will move on the other topics, go deeper in platforms, capabilities, and discuss various interesting subjects. I'm glad you were with me today and hope to see you in my upcoming videos. Feel free to leave comments and ask questions. I'm always happy to help. I want you to trade profitably over the long term. Have a great evening, everyone!